Hello everyone, this is Dare here. Hope you're well. Today I want to give you 5 simple steps to trade the non-farm payroll. These 5 simple steps could be used to trade other big news events like the FOMC or interest rate releases in other countries. So first of all, we will discuss what is NFP. We will show you how to analyze the NFP report numbers, and then we'll talk about the 5 simple steps, and finally we'll discuss the strategy drawbacks. So the first thing is to talk about what NFP is. As we all know, it is non-farm payroll. It's a report that reveals the US employment situation, shedding light on the strength of the economy. It is released by the Bureau of Labor Statistics once each month, usually on the first Friday. The non-farm payroll report causes one of the consistently largest rate movement of any news announcement in the Forex market. Therefore, a lot of traders and analysts, they watch this news event very, very keenly. Okay? Now, let's talk about how we can analyze the non-farm payroll numbers. So, when the numbers come out, what step will you take? How will you analyze it? How you understand the numbers? First of all, this is a Forex Factory information. This is a calendar from Forex Factory. You notice the dates of the announcement, the time of the announcement. You can set the time to your own local time. It's GMT time here. And this is the currency that will be affected, or the currency of the country. And this is the impact of the news. Red means high impact. And this is the news event itself. Now you have 3 numbers. You have the actual number, the forecast number, and the previous number. So this is a previous number, the last number that was released last month. Forecast number is the amount that's been agreed, consensus, by economists and analysts. That is the expected number. They think that is the number they're expecting to come. Okay? And the actual is the number that is released at this time. On the time of announcement, that is the number that comes out. Okay? Like any other piece of economic data, there are 3 ways to analyze the US non-farm payroll numbers. 3 ways. Number 1, when the actual number is better than the forecast, that means it's good for the economy and it's good for the currency. So the actual number, this is the expected, this is the forecast, this is what is expected. They are expecting 172,000 new jobs to be added to US economy. However, when the number came out, it came out better at 196,000 jobs. So it means more people are in employment, more people are working, and means more money in their pockets, and they can buy more things, therefore contributing more to the economy, making US economy growing. It makes it grow, and therefore makes US dollar increase. So we will see US dollar appreciate against most other currencies. Okay, that is number 1. Second thing that could happen is the actual number has no significant change to the forecast. So the number expected, let's assume, is 172 as it is now. And when it came out at 170 or 174 or something like that, in that range. It means there's no significant change to the number that was expected. So there will be misreaction for the economy and for the currency. The third type is when the number is worse than the forecast. So the actual number released is worse. So they were expecting 172K, and the number that came out is 120,000 new jobs. So that's worse than what the consensus was, or the forecast was. What that means is less number of people than expected were getting new jobs. Therefore, less number of people will be going to the shop and buying and contributing to the US economy, and it will have a negative impact on dollar. So at that point, you see a lot of currencies appreciate against the dollar. Okay, now you know how to read the numbers and analyze the numbers. Now let's go and discuss 5 simple steps to trade these numbers. So the 5 simple steps. Step number 1, set up your chart. It's a 15 minutes chart. You could use pound dollar, euro dollar, or any other major currency that involve dollar. Step 2, take no action for the first 15 minutes after the NFP announcement. After 15 minutes candle, you now have to wait for an inside bar to form. The inside bar now becomes our trade trigger. So you know what inside bar means? Inside bar means the bar, the high and the low of the bar is formed inside the previous bar. So the high and the low is smaller than the previous bar. Okay, so this is the news event. That's the big news event. So after this event, you wait until you see an inside bar. So inside bar was formed here. So the high of this inside bar become our trigger for long. The low of this becomes our trigger for short. So a breakout of either of this level will put us in a trade. So for this example, we are into a long trade after the breakout of this line here. Okay, so what next? Step 4, you place your stop above or below the most recent high or low. So now we're in a trade, so you need to put your stop loss. So you look for this previous bar here, so you put your stop loss below that bar if you are long. If you are short, you put your stop loss just above the bar. Remember, if you now see your stop loss, expected stop loss is more than 30 pips, then you should not take that trade. Okay, last step, how do you exit with a profit? So exit with at least 1 to 2 risk reward ratio. You can have 1 to 3, 1 to 4, 1 to 6, or even better. Or you can exit your trade after 4 hours. Okay, after you've entered, after 4 hours, you can come out of your trade. Okay, now we've seen the 5 simple steps to trade the non-farm payroll, or you can use it to trade any other big news event. Can we ask if this is fail proof? That means this can never fail? No, this is not fail proof. There will be times that this will not work, and it also has some disadvantages and setbacks and drawbacks. So let's look at the drawbacks for this strategy. Okay, all right, so what are the drawbacks? Number 1, it can experience string of losses. Hence, you need to have the great risk reward ratio, as we have discussed before. Secondly, the market may move in one direction aggressively, and it may begin to fade by the time we get an inside bar signal. And lastly, it is important to note, in high volatility times, even after waiting for a pattern setup, rates can reverse quickly. This is why it is important to have a stop in place. Okay guys, thank you very much for watching this video. I hope you understand this strategy, this simple strategy. If you have any questions or any comments, please, as usual, write them down for me on the video, and I will get back to you to answer some of your questions. So thank you so much. Remember to subscribe to the channel and also gives us a thumbs up. Till next time, it's Dari.